Welcome back. Construction firm Comisimpex has gone to a French court in its fight with the Congo Republic over what it says are more than $1 billion in unpaid bills, the latest step in a decades-old saga that has weighed on the nation's economy. Comisimpex, which worked on construction and public works projects from the early 1980s until a Congolese court ordered it into liquidation in 2012, wants Total, ENI, and other energy firms to pay taxes and royalties to the company instead of paying the state. Comisimpex, which has pursued Congo in courts in Europe and the United States for nearly 2 decades, launched its latest legal challenge in October 2016 at the Commercial Tribunal in the Paris suburb of Nanterre. Details of the case have not been publicized by any parties involved until now, a sensitive time for the government as it starts another round of talks with the International Monetary Fund on support for an economy battered by weak oil prices. The legal saga has weighed on Congo's sovereign rating and forced a temporary default on a Eurobond this year. And to commodities, the Brent oil price rose today, hovering around a 26-month high hit in the previous session after U.S. data showed an unexpected drop in crude stocks as refineries boosted output and amid threats from Turkey to cut crude exports from Iraq. Brent crude for November delivery was up 20 cents at $58.64 a barrel. It settled down 1% on Tuesday after earlier hitting $59.49, its highest since July 2015, and more than 34% above a 2017 low. U.S. crude for November delivery rose 28 cents to $52.16, having settled down 0.7% after hitting a 5-month high of $52.43 in the previous session. Oil prices have been supported by output curbs of 1.8 million barrels per day by the Organization of Petroleum Exporting Countries and cuts by other major producers, although U.S. crude has lagged behind Brent amid concerns that U.S. production growth could stoke oversupply. To precious metal now, gold was largely unchanged today after falling over 1% in the previous session on hawkish comments from U.S. Federal Reserve Chair Janet Yellen, while lingering North Korea worries supported prices. Spot gold inched 0.1% higher to $1,294 per ounce in the previous session. Prices fell 1.3% in what was the biggest loss in over 2 weeks. U.S. gold futures for December delivery fell 0.3% to $1,297 per ounce. Gold is highly sensitive to rising U.S. interest rates as these increase the opportunity cost of holding non-yielding bullion while boosting the greenback. And a Chinese car maker BAIC is expecting the first vehicles to roll off its new 11 billion rand South African assembly plant early next year, with most of the vehicles destined for export. The factory near car export hub of Port Elizabeth will be the first new car plant in South Africa in 4 decades and is expected to build 50,000 vehicles a year by 2022, half its estimated peak output. The Chinese have a 65% stake in the joint venture, with South Africa's state-owned Industrial Development Corporation owning the rest. The assembly plant includes a paint and body shop, but all parts will be imported. The cars are mainly expected to be exported to neighboring countries. And as Zimbabwe's economy continues on a downward spiral, fashion designers and entrepreneurs are also feeling the pinch. Tugamari Mavi, who has clothed some of the country's well-known personalities, has had to shut down his shop in Harare to operate from home, owing to low business, high rental costs, and stiff competition from cheap second-hand clothing.
Tugamira Mavi is putting together an outfit at his home in Harare, Zimbabwe. The 35-year-old fashion designer says he once dressed musicians and celebrities in the country, but was recently forced to close his shop in town to keep the business running. Tugamira's clothing label, Tomas Designs, has been in business for 10 years now. High rent, stiff competition from a second-hand clothes market, and an economic crisis in the country have all made it difficult for him to thrive.
In a good month, I would make at least about $800 to $900. But now, given the challenges that we are facing in Zimbabwe, it's not a very viable economy right now, because we have so many things that are sprouting up. You have people who are now selling clothes in the streets, you know, which are posing a major challenge to our business as designers, as tailors, because most of the clients that we would get to have them to design something for them, they are now going into the street and getting something for $1.
With Zimbabwe's economy struggling and the shortage of cash as people hoard US dollars, the main currency, some 230 companies closed shop in the first half of 2016, pushing more people into an already bulging informal economy. The country has never fully recovered from a slump that began in 2000 with the violent seizure of thousands of white-owned farms. In Harare's flea markets, second-hand clothes donated by Western charities sell at cheap prices, providing clothing to many. Though industrialists say importing second-hand clothes undermines African economies, it's a common scene across the continent. Zimbabwe banned imports of used clothes in 2015, but they are still smuggled across the border with Mozambique and remain the preferred choice for many Zimbabweans.
The pricing on the belts is very cheap. You can find something of high quality for maybe about $2 or so. And that same clothing, if you had to look for it in other shops, these other big shops, you can get it for maybe $25, and maybe it will be of less quality.
Industry experts say Zimbabwe has a market for 80 million garments annually, but only 20 million of those are locally manufactured. The government says the local textile industry does not have the capacity to meet demand in the country. Almost 90% of imported new clothes are exempt from duty because of regional trade agreements. At Paramount Garments, workers produce garments for corporate, industrial and casual wear sold in the country and abroad.
As an industry, we've gone down from a peak of 35,000 people to our current level of about 5,500, so we've significantly declined. That's not all because of second-hand clothing, but that is one of the issues. COMESA did do a study some years ago, about 4 years ago now, where they estimated the job losses in COMESA, the whole region of COMESA, was about 200,000 per year. So over 5 years, that's 1 million jobs lost in the COMESA region.
In the meantime, shortages of basic goods and fuel have emerged over the last few days in Zimbabwe, resulting in panic buying by consumers. Shortages of cash, which started last year, have worsened, with some banks unable to provide money at all to customers.
And with that story from Zimbabwe, we draw the curtain on this edition of the program. Thank you very much for watching. I'm Chimuzi Iwago.